Hey guys, it is Julie here from JT.Wealth. In today's video, we are on part 9 of our dividend investing series. But before we get into all of that, there are a few things I would like to address based on a recent report. So on my channel here, I discuss a lot of different companies, a lot of different stocks, and I just want to make it 100% clear that none of these companies that I have ever discussed here on the channel have paid me a cent for mentioning their names in my videos. I feel I have been fairly transparent as far as my income and what I've made here on YouTube. Several videos I've put out explaining all of my income from this, including my Patreon group and referrals that I get from different affiliate links signing up to new investment platforms. But I have never done any sponsored videos or taken money from companies to promote their stock. On top of that, YouTube does require you to disclose if you are being compensated for a video. So if you are ever coming across a video that a YouTuber has been paid to make, there will be that disclaimer there letting you know that it is a sponsored content. I take a lot of pride on the content that I create for this channel, and I always try to do unbiased research and look for both the pros and the cons on different stocks and try to deliver a very fair representation of that in my videos for you all. Now, I'm not going to delve into this topic any further, and if you do want some more information on it, I highly suggest you check out my friend Jack's video over at Jack Spencer Investing, who does a wonderful job of covering all of this. And I commit to you guys that I will continue to be as transparent as possible on my YouTube journey here. On that note, let's get into passive income. All right, guys, so like I said, we are on part 9 of our dividend investing series. Now, this is a series where we are investing $50 every week into a dividend paying portfolio. The goal of this portfolio is to create a long-term investment that eventually will pay us upwards of $3,000 per month in dividend income. In today's video, we are going to take a look at the current holdings in our M1 Finance portfolio. We're adding 2 new stocks to our dividends this week, so I'm going to cover both of those. And I'm also going to do a brush up on the calculations we used to get that $3,000 a month in passive income. And before we get into the meat and potatoes there, this is just your friendly reminder to please subscribe to the channel if you haven't done so already. And if you enjoy the video, make sure you give us a big thumbs up as well. I also just want to say a huge thank you to everyone who tuned in to our live stream Q&A yesterday. I was very nervous doing my first live stream, but the feedback and interaction was really amazing and I had a lot of fun, and I hope you guys enjoyed it too. Okay, so I'm going to start off with the calculations we used in projecting the future income from this dividend portfolio. Now, you do need to keep in mind, this is not a get rich quick kind of thing. This is $50 a week for the next 25 years. So this is really aimed at people in their 20s, 30s, even 40. 25 years is gonna get you to that retirement age where you can really take advantage of having this extra income. So in calculating our future returns, I created this Excel spreadsheet, and this was at the time that we had 8 dividend funds in our portfolio. So yes, I will update this soon to reflect the new ones. In the first column there, we have our current dividend yield. And then the next 2 columns, I have our dividend growth. So I have the 1-year trailing 12-month dividend growth, and then the 3-year dividend growth amount as well. And I got these numbers looking at Seeking Alpha. So if you go under dividends and dividend growth, they have a great information here. It has that compound annual growth rate for the 3, 5, and 10 years and how many years of growth the dividend fund has had. Now, I chose to use the 1 and 3 year as they actually tended to be smaller numbers, and I was trying to go on the more conservative side. Now, on top of the dividend growth, we're actually looking at the stock growth as well. So I took a look at the compound annual growth over 25 years, 15 years, and 7 years. And to do this, I used the Online Investor, who has a great tool where you can pick the symbol and the time frame that you're wanting to look at, and then gives you these charts with all of the data. So it is important to note that we are using the lower number here, which is the growth without dividends, since our calculator is going to also include the dividends. So we don't want to count those twice. So I input the numbers of all the 25, 15, and 7 years annual growth for each stock and got an average number down at the bottom. And then below that, you can see I took the average of all of those three numbers since they weren't wildly different from each other and got that nice average number of 5.05% annual return. So then we take all of these numbers and we put them into our dividend calculator. Now, my favorite dividend calculator is this calculator from marketbeat.com, as it allows you to put in a lot of different variables. So looking at this, we are creating a portfolio here. Our starting principal, we have that initial $100, and then our annual contributions is that $2,600 per year, which represents our $50 per week. Now for the numbers on the right there, when we're looking at dividend yield, that expected dividend increase, and annual share price appreciation, we jump back to our Excel spreadsheet, and I'm simply taking our current average dividend yield, that more conservative trailing 12 months of dividend growth, just because 3-year was a bit higher. So again, I want it to be more conservative, and our average compound annual growth of the 5.05%. So when we put all of those into our calculator, including a quarterly distribution, our dividend tax rate there and everything, 25 years invested, and the big key here, guys, is that DRIP. So that's your dividend reinvestment plan, meaning each time those dividends are paid out, they are just being reinvested back into those stocks. Down below, you can see after 25 years, we have an ending balance just over $340,000, and our annual dividend income is over $36,000 per year. So that is where we are getting our monthly passive income from. Now, these calculations work because they have the benefit of time. They have 25 years on them to continue compounding, continue seeing that year-over-year appreciation, both on the stock, but also on the dividend. So let's take a look at our current M1 Finance account. Right now, our total value is sitting at $603.82. We've had a gain of $9.23, and our current return right now is at 2.97%. Looking at the breakdown of our stocks, we still have a mix on the red and the green. But again, we don't mind these because we have a 25-year investment time frame. So those fluctuations are expected, and we are confident in the end all will work out. We have our Navient Corp, our JP Morgan Chase, Invesco, S&P 500 High Dividend Fund, Walgreens Boots Alliance, 3M, Realty Income Corp, Cisco Systems, Pfizer, AT&T, Shaw Communications, and our newest additions are CocaCola and Abbvie. So let's look a bit closer at those two. Now, first up is CocaCola, who should hopefully need little or no introduction, as they are one of the most recognized brands in the world. And this stock is actually one of Warren Buffett's favorites and has been in his portfolio since 1988, which is no surprise considering these guys have had dividend growth for over 58 consecutive years. Their dividend yield is 3.31%, and it is paid out quarterly, with the most recent payout coming on October 1st. So we'll have the next one coming up at the end of the year, and current price being around that $50 mark. Now, aside from a solid dividend history, Coca-Cola is also down about 16% from those pre-pandemic highs of $60. So I think we have some good room for growth on their stock price as well, which is always an excellent bonus. Second on our list today is Abbvie, who is probably a little less known than Coca-Cola, and they are a biopharmaceutical company. So Abbvie is a solid dividend player and has actually increased their dividend 5 times on a year-over-year basis for an average annual increase of 22.18%. Their current dividend yield is a healthy 5.42% and is paid out quarterly, with the next payout date coming out on November 16th. Current share price sitting at the $87 mark as well. Another strong point for Abbvie is their upcoming earnings report on October 30th. They are expected to report earnings per share around $2.78, which is up nearly 20% from the prior year's quarter. An expected quarterly revenue is at $12.85 billion, which is up over 50% from last year's same period. So always love seeing some great growth potential on top of solid dividends. So that is part 9 of our dividend investing series. Hopefully this helped you explain our long-term goals for this portfolio and why we think we can achieve that $3,000 a month in passive income, and also 2 really solid additions to our portfolio. Please, as always, let me know your thoughts in the comments down below. What do you think of our current dividend holdings, and what are some dividend picks that you love in your portfolio? If you made it all the way to the end of the video, please make sure to give us a big thumbs up and that you're subscribed to the channel as well. I hope you guys have an amazing day. Thank you so much for watching, and cheers!